Institutional Scalper on Monday, February 3rd, gave you guys these screenshots of where the market would pull back down into in terms of the deltas, right? And that was sent to you guys up here at a high. Look at how accurate this stuff is. So these are the deltas. You can see the coordinates right here, the 94645. So let's go ahead and get started. Before I share my screen in today's video breakdown, I'm just going to break down for you guys everything that myself and Scalper give to you all ahead of the curve, to just kind of, position you guys in such a way where we are always ahead of the retail crowd, whether it's in the form of research, technical analysis, or fundamental analytics. All right. We are always ahead of the average retail investor here at CYPRX, and I'm going to attempt to do my due diligence to show you guys how I simply made $2,000 today in less than an hour. I'm out of the trade completely. I sent you guys my P&L today. It was about 2,000 some odd dollars. Nothing significant, right? I'm not sitting here claiming that I'm a freaking multi-millionaire trader. My portfolio on Osprey FX is about $75,000. So it's nothing too significant, a couple percentage points in terms of profit. But still, this strategy and the things that we deliver to you guys are readily available to each and every single one of you all. So you choose to apply yourselves properly, not overthink things, not overcomplicate things, and just be patient, right? Along with managing your risk properly, understanding the fundamentals, and then obviously, of course, having the risk to, or having the mentality to safely expose yourself to these markets in terms of how you manage your risk, right? If you're trading on leverage, I've personally told you guys, you should never be risking more than 1% of your overall account, in my personal opinion, right? 0.5% at that on a leveraged account. Okay. We're not here, especially on leveraged accounts, to try and max out and become billionaires, right? It's just a simplistic way to make income on the internet, by understanding the things that we deliver in this community in a much more faster way, right? So $2,000 in less than an hour is what most people strive to make in like 2 weeks at a minimum wage job, or maybe even 3 weeks. I don't know. I haven't personally worked a minimum wage job ever in my adult life. So, well, I guess I don't know. I guess you could classify the military as a minimum wage job, but still, regardless. All right, so I want to go over for you guys first how we got to where we're at today. Bitcoin's about to tap back into $100,000 as we speak. So kind of now feel stupid closing out the trade, but I didn't want to look like an idiot if the market pulled back on live Zoom call with you guys and lose out some money. So I'm not greedy. I took my profit, $2,000 today. I'll end the weekend or go into the weekend happy. I want to share a screen with you guys and just first show you everything that you had the same access to that I had access to in terms of technical analysis and fundamentals. Okay. And we also, myself and Scalper, mentioned all of these things to you guys in the Bitcoin chat today, or sorry, excuse me, ahead of the curve. So for those of you guys that don't know, if you're not in the monthly section, you guys have access to these institutional delta zones. So this is going to be the first portion of today's trade analysis and how I was able to kind of conjure where I want to be buying from, what levels I'm paying attention to and what I'm looking at. So for me, the delta zones, I don't use Scalper's order flow analysis and the way that he breaks down technical analysis. For me, it's too complex. I became profitable way before I met institutional Scalper, so I still use my 2.0 strategy, right? How I utilize the deltas is I utilize these deltas as areas of interest. I set alarms and alerts at these deltas. So if I want to be a buyer, I'm looking for price to come down or near to the institutional deltas in the form of buy deltas, right? Once the price action comes down into these deltas, I'll go in and I look for CYPRX 2.0 confluences, which we'll again go over today. Um, but just to show you guys, all right, so when Bitcoin was trading at the beginning of the week on Monday at about $101,000, Scalper on Monday, as you guys can see here via the timestamp, I always like to deliver timestamps because they're important when you're following influencers on the internet. You never want to pay attention to people that are only putting out hindsight information. For example, today is a hindsight breakdown. We're breaking down the trade after it has come into fruition, but I want to show you guys here in the community, you've had knowledge on what was most likely going to be the case and what was going to happen via price action in terms of the total cryptocurrency market cap and Bitcoin way ahead of the move, days in advance. Okay. So on Monday, February 3rd, Scalper put out these institutional deltas. And you can see here, I know that the print is a little bit small, okay, but the very first institutional buy delta, where we can see institutions were buying from previously before sending price up into the sell delta where price retraced from the 101, was coming in at about the 94 to 95,000 range, right? So that's the first top buy delta here. All right. So I simply slapped that on my charts. I set an alert right slightly above the institutional delta, and I just waited literally all week. Think about it. This was sent out to you guys on Monday. Now, fast forward, it is Friday, and it took that long in order for this price action to come into fruition. So you would have had to have 5 days or 4 days, relatively speaking, worth of patience before executing these trades. So this is not some scalp, get rich quick. Oh, I have access to these institutional deltas, I'm going to become rich overnight strategy. It's a very simplistic. We know most likely where the institutions are going to be buying and selling from in advance, and it is your job to be patient, to sit and wait, right? And I try to express that to you guys. And as you scroll down, you can even see in the chat, right? Days in advance, I try to, enlighten you guys as to what I'm paying attention to. Here you can see this is from Tuesday, the day after, February 4th. I said Bitcoin is headed straight for the deltas, right? Because the market started to retrace. We started to pull back. I did scalp in between these levels. Obviously, of course, that's because I'm a little bit more advanced, but still, regardless, I mentioned to you guys that price action was pulling back down into the deltas. Okay. Um, let's see. All right. So here I even gave you guys some areas of interest to be paying attention to for the CYPRX 2.0 material. Those were met. I even said here, the lows on Bitcoin were liquidated, looking for price action to come back down into the deltas. I gave you guys psychological levels that I was paying attention to, right? And those all correlated with the deltas that Scalper gave days in advance. So that was one, right? That's the technical aspect of what you guys have access to well in advance before the average retail investor. Because think about it right now, right? Monday all the way up until today, the market was relatively bearish all week, right? We were in a massive pullback scenario. Think about the average retail herd now. Today, the market is up 3.6%, i.e., the total cryptocurrency market cap. Retail traders are probably like, what the fudge is going on? All week, 4 days in a row, we're bearish. And then today, the market completely almost supersedes all the bearish activity. What's happening? Well, in terms of fundamental activity, we also gave you guys analysis well in advance to be paying attention to what would drive market sentiment back risk on in the market. So this is just an example. This is our February 4th Asia Session 2025 report. And if we scroll right down here, I always try to give you guys market scenarios, right? Risk on, risk off scenarios. What would drive sentiment risk on, and what would flip things bearish risk off? Here you guys can see no overly extensive analysis, no indicators on my charts, just sound, simple logic, fundamentals, and deltas. Okay. I said here, for a risk on market mood, we want to see continued de-escalation of tariff threats, especially with Mexico, Canada, support market optimism. We want to see Fed speakers hinting at a more accommodative stance or reinforcing the expectations of future rate cuts. And then we also want to see labor market data showing mild signs of cooling, easing inflationary concerns, and not sparking recessionary fears. If we could get those three things, look at the screenshot I sent you guys. We were most likely going to see a bounce from the 305. You can see it right here. It's marked off on the charts, psychological level, and start to retrace some of the most recent bearish move, right? This was sent to you guys on the 4th. Today is the 7th, all right? And so now if we just go look at the charts, like I'm not making this stuff up. I don't have a crystal ball. I just don't overly analyze the markets. It's very logic. Okay. It's very simplistic. And you can see here what happened today in terms of fundamentals. What did we get? The first fundamental, right? We had all throughout the week, Fed speakers not necessarily pushing back on rate cuts, but stating that they want to see more data, they're data dependent, and that they could still see rate cuts happening this year if the data supports it. So there was no real pushback on rate cut, albeit the Fed did not come out extremely dovish. They were more so hawkish to neutral leaning, just stating that they want to be data dependent before cutting rates again, but still leaving rate cut bets on the table. That was the first thing we got this week. Second thing we got this week was today we had some mild cooling in the US labor market data. Now, albeit the data came out mixed, I broke that down for you guys in the Discord. Overall, you can see right here, it says US job growth slowed sharply, right? So, albeit the data did come out mixed in the labor market, but it didn't come out extensively upbeat or it didn't come out extensively downbeat, sparking recessionary fear. So it came out relatively mild, still keeping rate cuts on the table for now. All right. So obviously, of course, easing investor uncertainty because in previous sessions we were like, oh crap, investors are becoming a little bit uncertain about the data because at the beginning and the middle of the week we had mixed labor market data. Well, today kind of solidified that at least at a minimum, the labor market is not overly heating and it's not underperforming to the point where it's sparking recessionary fears, right? And so that type of environment fundamentally drives risk appetite. Okay, especially considering that prices were at a discount today when that data came out. Hint, hint, right? Kind of put two and two together. We also saw, so we had neutral to non-hawkish leaning Fed speakers still keeping rate cuts on the table, right? We had mild cooling in labor market figures. And then you can see right here, I'm just going to show you guys a couple of reports because the last thing that we talked about was we wanted to see no fear, uncertainty, and doubt surrounding tariffs. We wanted to see easing tensions surrounding tariffs. You can see that right here, right? Continued de-escalations of tariffs. That was one of the three things that we wanted to see this week for a risk-on market mood to see a bounce from 305 trillion. Okay. And right here, just looking at the reports now today, okay, because again, remember, we gave you that report on February 4th, right? This is a retail report from February 7th that says right down here at the bottom, despite Friday's modest rebound, the dollar is on track to end the week lower following a sharp reversal driven by easing concerns over global trade wars. Then right here is another fundamental piece from today, the retail crowd catching up to us here at CYPRX. It says, for all the doom and gloom and talk of trade wars and tariffs and broad geopolitical risk, investors keep putting money to work at companies with good valuations, i.e., stocks, right? Stocks had relatively decent performances this week across the board. Indications of strong labor market may spur bullish reactions in the US dollar as it encourages the Federal Reserve to keep US interest rates on hold, but a weaker than expected NFP report may reduce headwinds for the greenback as it puts pressure on the central bank to further unwind its restrictive policy, said a strategist at forex.com. So you can see here they're talking about the same things that we're talking about, but we delivered all this stuff to you guys days in advance. Okay, that's the benefit of being in this community. So not only in the form of technical analysis did you guys know where the total cryptocurrency market cap was most likely going to pull back and bounce from, Bitcoin was going to pull back and bounce from, but you also had fundamental analytics to support your thesis and the directional bias in terms of where you were going to either dollar cost average in, leverage, or spot trade. All right. So fundamentals out of the way. All right. Let's go over to the technical aspect of things. So we obviously know total cryptocurrency market cap. That's what I look at for market direction. If the market is bleeding, right, over $50 billion in value, okay, I tend to leave things alone. I tend to wait and see what the market's going to do. Market sentiment usually on days like that is risk off. Today, you can clearly see the total market cap is up over $100 billion, right? As for Bitcoin's price action, so here we are on the hourly time frame. All right. And this is what I like to just show you guys in terms of technical analysis on the charts when you had access to all this stuff. Before we get down to the nitty gritty and we go down to the lower time frames and break down my confluences, I'm just trying to give you guys the higher time frame confluences first. So this is where on the charts, Institutional Scalper on Monday, February 3rd, gave you guys these screenshots of where the market would pull back down into in terms of the deltas, right? And that was sent to you guys up here at a high. Look at how accurate this stuff is. So these are the deltas. You can see the coordinates right here, the 94645 and the 95614, right? Price action and this right here, this little tiny message is where in the Discord I sent to you guys that price is coming down to the deltas because I had an alarm set that was triggered like right here, right? So I messaged you guys during London session saying, hey, price action is coming down to the deltas. Sure enough, you can see that we retraced straight down into the deltas. So just thinking of not only delta strategy, right? But think of CYPRX 2.0 strategy. What do I attempt to teach you guys? If you want to be a buyer in these markets, you want to attempt to be a buyer, at least again, not financial advice from my perspective and what I've been doing in the markets for the past 9 years, is buying from where previous institutions showed buy interest at that led to a market break in structure, right? Because we know that these market makers are the only people with the amount of money to move the markets in such a way, right? Retail traders don't have the amount of money to do or push the markets up like this, right? So you can see here at an institutional delta back on Monday, February 3rd, London session, market makers were buying Bitcoin, buying it enough to completely reverse this whole entire bearish leg. And that led to a tiny break in market structure where you can see this wick slightly peaked above these equal highs right here, right? So in the term of CYPRX 2.0 strategy, if we were just to remove these deltas, this would be an area of interest on the higher time frame that you'd be highlighting from the candlestick wick to the body of the candlestick and extending that over to the right hand side to say, okay, this is an area of interest I want to be a buyer from in the form of a discounted area where the market makers could possibly be a buyer from again, right? So that's just one little tiny tidbit of a strategy. Okay. So market pulled back down into the deltas. That was one confluence in terms of technical analysis that I utilized today to take this trade. Price action was trading above the deltas. I just went over risk on market mood. The market sentiment was risk on today after a deep retracement throughout the entirety of the week. And so, with that being said, all that I had to do after analyzing the markets on the higher time frame, gathering the fundamentals to back the directional bias in which I wanted to trade in, which is to the upside, right? I don't just want to be buying Bitcoin when there's no fundamentals supporting a risk on market mood or price appreciation of risk assets. Now we can drop down to the lower time frames. All right. So this was my trade today. As I said, I shouldn't have taken profit just now. I probably would have made 4 grand. But still, regardless, a nice solid 1 to 3 RR. So let's break this down for you guys. So you already know fundamentals supporting a risk on market environment today that we covered days in advance. Here you can see, again, we're now on the 10-minute time frame. We went from the hourly. Okay. I'm just going to circle this for you guys so we don't get lost in terms of price action. All right. Keep in mind, when we jump down to the 10-minute time frame, this green circle is where the delta zones were on the 10-minute time frame, or sorry, excuse me, on the hourly time frame. So when we jump down to the 10-minute, you're going to see how this is an area where London or Asia session on the lower time frames were buying from. All right. So if we come down here, or New York session, sorry about that. All right. So you can see right here, this is that same green circle from the hourly. Now we're on the 10-minute. All right. So with that being said, all that's left for you to do after you've started at the higher time frame, supportive fundamentals, higher time frame technical analysis, price action on the higher time frame at a discount, which I showed you guys. Also, price action now creating bullish order flow above the deltas. Here in the CYPRX 2.0 content, we'd like to start to track where previous sessions were buying from. So here you can clearly see this is New York session. New York session sold price action off and bought right highly above a delta. Keep in mind that over to the left-hand side, I showed you guys back on Monday, that is exactly where London session was buying from, right? And I've told you guys in the 2.0 content, these market makers like to buy where they previously bought from. They're all in cahoots with each other. The London institutions, the Asia institutions, the New York institutions, they're all working in tandem with each other to make money, right? To manipulate the shit out of retail and put money in their pockets. So New York session bought here. Once they pass price action over to Asia session, you can see Asia session in their manipulation window created early sellers, early buyers underneath of lows. They push price action down into a slight discounted area where New York session was buying from, and then they bought, right? They bought, and that price action led to a previous market break in structure where all of these lower highs were broken, right? So we can see that the market makers are instead of attacking lows, they're now starting to attack highs. I taught you guys this in yesterday's video breakdown, right? Where if we see bullish intent in the sense of market makers failing to attack lows in the market, the only other logical place for them to attack in terms of where liquidity exists is above highs, right? So you have to shift your bias. I don't trade Asia session and I try not to trade London session, right? So these two sessions are my analysis sessions. That means when I wake up during New York session, these are the sessions I usually tend to come and analyze. So I started my analysis here looking at Asia session. You can see again, just using the CYPRX 2.0 ideologies, I like to identify at least two areas of interest during each session where the market makers, if fundamentals are bullish, and if we see price action tapping into deltas, creating order flow in the terms of bullish order flow above deltas, I like to go in and look up two areas of interest where market makers were buying from that led to a break in market structure, right? So that way I can say to myself as a retail investor, knowing that market makers like to buy at a discount where they previously bought from, those are good areas of interest I want to be buying from, right? So all I simply did, you can see my analytics here, is I took a box tool from the wick of this candlestick because this is the higher low that came in before the market broke to the upside, right? And I highlighted that from the body down to the wick and extended that over to the right-hand side, right? Then Asia session, passing price action over into London, you can see at the beginning of London session, they did the same exact thing that New York session did from the previous London session on the higher time frame. They push price action down into discount and they simply buy where Asia session bought from. It's like a freaking trend. And so I annotated that. Rolling into London session, again, using the same methodologies, now that we're clearly respecting bullish order flow, the market is making higher highs, higher lows, higher highs, higher lows. I now want to identify two areas during London session where I could also be a buyer from because, again, I trade this session, New York, right? So simply all I did was, again, scale in and see where market makers created higher lows that led to break in market structure. So you can see here, this higher low, why did I not annotate it? Because this little tiny bullish move, you can see the candlestick bodies did not take out this previous lower high. So I did not annotate this higher low. However, this higher low right here is the first higher low that came in where we can see previous lower highs over to the left-hand side was broken in the form of bullish price action. So during London session, this was the first area of interest that I annotated on the charts as to where during New York session I could want to be a buyer from, keeping in mind that New York session could also possibly push price action down into Asia session buys to be a buyer. So still having this area of interest on my radar as well, right? A second area of interest that I gathered using the same methodology. So this bullish move didn't really pull back until right here, right? Where for the first time, the market created another higher low that led to another bullish move that broke previous bearish market structure. So again, using the same ideology, I took my box tool, highlighted from the candlestick bodies down to the wick, and just extended that over to the right-hand side, right? So now, trading in this New York session, understanding the fundamentals are relatively bullish to the upside or supporting a risk-on environment, seeing that price action during the previous New York session bounced from deltas, right? I now have three areas of interest, one, two, and three, where if price comes down into these areas of interest, it is now up to me to determine how much capital I want to expose to this market. And I already mentioned to you guys, for me, it's anywhere between 0.5% or 1%, right? So for me, let me get my regular tool back. All right, cool. So remember, today we had the NFP report. We had the NFP report and the unemployment claims. Looking at time, okay? The data this morning came out at 7:30 a.m. here in Texas, right? Well, interestingly enough, right at 7:30 a.m., dropping down to the lower time frame, let's go down to the 5 minute now. Look at how freaking clutch this is. Price action, as soon as the data came out, immediately shot up to the upside. So you can see in terms of this wick right here, price action cleared out all the early sellers. So anybody that was trying to sell the news early to try to guess the market direction above these highs got wicked out right here. Then right after that, market makers literally to the freaking T dropped price action straight down into where London session had previously bought from. I saw that wick because I had annotated those areas of interest. You can see how freaking accurate that is, right? Literally pip for pip, they dropped price action down into where London session bought from. So all I simply did was I placed a stop loss nice and tight right beneath the previous London session buy area, keeping in mind that they could still hunt for lower prices. So this would be the first risk that I take in the market, understanding that this trade might not play out and price action might continue to the downside to get a better discount. I'm still willing to take that risk here because, again, we're looking to minimize our risk and maximize our reward. So for me, this was a good sound 1 to 3 risk to reward ratio where I'm just simply looking to keep my nice and tight stop loss right beneath a higher low, and simply target the first most recent lower high or high as my take profit one. Relatively speaking, just looking for a 1 to 3, right? So as soon as price action wicked down into this area, I started to facilitate orders. It was a little bit shaky because of the spread. So really I entered up here, right? It was probably like at the 975 psychological level instead of exactly at this discounted price, but still nonetheless entered down here at this discounted area. And you can see how that worked out in my favor, right? Now, regardless if you put on areas of interest or not, let's just say you use the fib, right? So again, you can see how taking a fib from the previous areas where market makers are buying from to where price action started pulling back, this was also a 79% discount from where previous market makers were buying from, right? So that's another confluence that you guys could have utilized. Very sound, simple technical analysis. This was nothing extensive. And this is again just showing you guys that you had all this information well in advance, right? You had fundamentals telling you guys what was most likely going to happen in terms of market direction, which we can clearly see now is extremely accurate, right? We weren't, remember on Zoom call, I even told you guys, I said, we're not expecting anything like this. We're not expecting that the market's going to freaking do this and make new all-time highs if fundamentals are bullish. No, that's unrealistic, right? You don't want to bring unrealistic expectations to the market. But can we start to see a retracement or a recovery of this downside weekly move and possibly end the week slightly higher? Absolutely, right? Absolutely. So now you guys can see that we're on Friday. The total cryptocurrency market cap is sitting at where we projected it would be roughly sitting at, given the risk on market mood that we give you guys on the 4th. And you can also see in terms of Bitcoin's price action that the buy deltas that Scalper gave you guys days in advance have now been hit, and price action is slowly creeping back towards the sell deltas. I wouldn't be surprised if market sentiment does continue to remain risk on, right, over the weekend, as that means as long as no crazy fundamentals come out and just completely deteriorate this current risk appetite, right, we're most likely going to see Bitcoin's price action tap back into the sell deltas, right? So again, just trading from delta to delta. I appreciate you guys for tapping in with me, and hopefully you all have been paying attention, even if you are not. Let me stop the recording.